All right. So we left off at with healthcare and health insurance prior. And so we're going to pick up with a couple of other types. The first thing is, well, what if you have a problem or can't work or live independently? And so there are some insurances that are made for specifically for that. So in terms of being unable to work, most of the time, um, you're unable to work because of a disability. So disability insurance is meant to ensure that any earnings that you might be losing or have lost because of an injury or an illness um, will be replaced partially. Um, that's it's a little bit different than Social Security disability, which in that case, those are that particular insurance covers if you can't work at any job at all. And so that's a little bit different. For the most part, disability insurance is best obtained from your employer because most injuries do happen at the work or near the workplace and so forth. And this particular one is to help replace those earnings when you can't work. So you might be basically considered what's this a long-term disability is really what this is considered. And long-term is often defined could be someone who's unable to work for a period of over sometimes it's as short as 3 months, over 6 months, and you still can't work over a year, etc. So how do you replace your earnings? That's really what disability insurance is. It's cheapest when you can get it from your employer um, because they can insure people as a group. When you do it individually, it can be very, very expensive. And it's not like you're going to be replacing 100% of your earnings. Policies will replace 50% of your earnings, 75% up to 80% of your earnings, but very rarely do they ever go above that. If you cannot live independently, this particular type of insurance called long-term care, this particular system isn't fully tested yet. In other words, it's relatively new in its popularity since the 80s, and it's really for extended nursing care um, when you're not hospitalized. Hmm. Um, this is something that is very important to a lot of people, but you're basically taking some type of risk that the policy that you have is going to be covering this extended nursing care that you might need at home. That's different than what would be covered under certain health insurance types of policies. Um, and again, you can purchase this individually. Oftentimes, it's the only way you can get this type of an insurance. It's I would say that it works for some people. It doesn't work for others. It's still relatively young as an insurance program. Um, so long-term insurance can be looked at through independent insurance agents that can deal with healthcare and other types of issues like that. So some insurance agents are limited into what insurance policies they can sell. And so you want to have an agent who can sell this particular type of um, healthcare and type of, not all of them do. Not all of them do. So, in essence, I would definitely recommend disability insurance through your employer if it's offered to you to replace a portion of your earnings in the case of time where you may not be able to work because of illness or injury. It's cheapest to get it through your employer. Okay. I don't have any recommendations or thoughts on the long care long-term care insurance because it's still relatively playing itself out right now, actually. It's mixed. All right, we're going to be spending a lot of time. Chapter 10 really is our main focus of everything, and that's on property and liability insurance. And this is basically covers property, your particular property, and property of others. And liability is a very, very important aspect that a lot of people just don't get. But it's super, super important. So property insurance basically is a payment to the insured person if your property is damaged or destroyed by an accident. Okay, so this basically insurance covers losses to the insured person. For the most common property and liability insurance is your auto policy, and the minimum coverage for property insurance, I think, is 10,000 in New York, up to 100,000, and that's what I have. That's what I recommend because it's amazing how much. I mean, you hit a particular car, you're going to be at 50,000, right? So or more. So so I think this is one of those types of things where 10,000 is not enough. It's just not enough, even though it's the minimum required. You probably think about increasing that. For a homeowner's policy, property insurance is what basically was happening in this case to your house or whatnot, or something that happens inside that would pay you for the loss. Liability is one of those very interesting types of things because, believe it or not, anything that happens on your property, whether it's a rented property or an owned property, is your responsibility. In other words, you're liable for the safety of others on your property. So, and a lot of people just don't either get that or want to get that. But it is the reality, the legal reality that we live in. And so that's a risk that a lot of people don't have covered that they really should. Okay, so this is a payment to others if someone accidentally causes harm to other people or property. Yes, 300,000 is good. I always have between 500,000 and a million. It's one of those types of things where if something happens, it can go dramatically wrong. So, for example, you might have a friend over at your apartment. Your apartment, technically, if you're renting an apartment, technically that's considered your property under the law because that lease provides you with that property for that period of time. And you have someone at your apartment, they're staying over, they're taking a shower, they slip and fall because the shower is I don't know, slippery, and hit their head, some terrible thing happens. Well, guess what? It's your apartment, it's your problem. It's your problem. And that means you're liable for that payment to fix that person who was injured on your property because it accidentally caused harm. That's why you have a lot of people that own property, including that have pools. You have a fence or other things around your pool because anybody that walks into that yard and slips into the pool, technically it's your pool, it's your property. Yeah, if you have and I like fires myself, not that I'm a pyromaniac, but I do like a little campfire. And if it's on your property, anyone gets hurt, burned, it's your problem. It's your liability. You could be having people over early for a nice dinner party, wine and cheese, whatever. Someone's helping you cut the cheese and cuts themselves and needs to go to the hospital. That's your problem. You're liable for that because it's your house, it's your knife, it's your kitchen. It's your problem.
My friend who got burned, they actually sued the owner of the apartment, the apartment building, the maker of the fire pit. I mean, it was massive.
Why leave anybody out in a good liability? Yeah, I mean it's one of those things that If it caused injury, accidentally, of course, caused injury. I mean, if that person ran into the fire, it's a deliberate type of thing. You're not going to have much of a lawsuit, although there is liability involved. Again, same thing for your car. You hit anybody, even if you didn't mean to hit someone, and it could be a very minor accident, but any damage that's done to the person, and you never know, you hit someone, might just be like really easy, and then like a day or two later, they start having back pain, or they start having other type of thing. Technically, you're liable for that if you were the one who caused the accident. Um, and so any injury or loss to others is what liability insurance is. Why you need so much liability insurance, particularly like for car and property, like your home or renters, is because most of the stuff that happens to people happens either from their house or in their car. Um, and so this is where your liability is highest. So, for example, you're driving down the road, you're doing a great job driving and you don't have anything wrong with you, et cetera. You're not impaired or anything. And just so happens you know, you hit somebody. It could be a pedestrian, could be a car with someone or more than one person in it. And you cause damage. Well, it's an accident. Yes, you didn't mean to do it. And so you'll certainly have property insurance covering the loss of the property. So the car will get covered, any damage to the car will get covered. But then the people in the car, they might need medical attention. If they're out of work, there might be wages that you might be liable to cover. If they need to hire a lawyer to sue you, you might be responsible to cover the lawyer fees. I mean, it just bills. That's why you need a lot of liability insurance. These things just sort of pile on very, very quickly. And again, a lot of people don't know that if you hurt someone, you're responsible for their health care, their health needs. You're responsible for their lost wages, things like that. People don't realize all of that type of stuff. But driving a car is a very important thing to do. But if it's in any way, shape, or form you screw up, there literally could be hell to pay, because these costs start adding up. It's pretty amazing. First, if there's any other people in the car, you're going to be liable for all of that as well if it's your fault. So that's part of the problem. A lot of people just totally underestimate their need for this, and so what happens? You have most people assume the risk. They just basically assume the risk. And then what happened with Sarah? She was telling us she got into that accident and someone didn't have enough coverage. I mean, it doesn't mean the other person's still not liable. It's just that they didn't have the coverage in which they were paid. But you have to think about it yourself. You have to think about covering yourself. So this is provided by individuals. This is why you see all the commercials for insurance, whether it's Geico or Emu, and all the crazy characters from Flo and Company, Progressive, whatever the characters, whatever the Farmers Insurance. I mean, whatever commercials you've seen, they are very, very big at providing property and liability insurance. It means they sell auto and home, and which is including renters insurance. And this is what you need to talk to them about. And we're going to go through a policy, so you'll see a bit about what you need. But these are really, really important, and this matters to everybody. And all of you, I think, drive somewhere, and you all have places to live. So this might be something, an educational moment for you, and if you live with your parents, to understand a bit more about the insurance. It's a teaching moment. Okay, so the property and liability insurance that we'll be looking at more specifically is the auto policies that we all have, which again cover both liability and property. Homeowners insurance, there's a lot of different types of homeowners insurance depending on what type of home you you have. There are special types of automobile coverages as well. If you have an antique car, it's not just you can go to Geico and they're going to give you, 15% because you spent 15 minutes with them. There are special policies for special and unique products that are very difficult to replace if they are damaged. So we're talking about general stuff. If you have something very specific, you'll need a special policy for that. Part of a homeowner's part of the homeowner's insurance is something called renter's insurance. And again, anything that creates a loss from damage or any type of liability issues, even though you're renting, whatever happens inside your apartment is your problem, not the landlord's problem. Okay, if it happens outside, then it could be considered the landlord's problem as well. And so that's definitely something where Clark was mentioning just suing everybody. Because it depends on what happened. It could be technically a liability for that. So we're going to be looking at some details here for sure. It's the law that liability and property insurance is required. Every state has their own set of laws requiring or setting the minimum coverages that everybody needs to have. What a lot of people overestimate is the need for life insurance. It is true that at one point in time, you're going to need life insurance. If anyone is dependent on your income to live, okay? If anyone is dependent on your income to live their life, if your life was gone, that would be the risk. Their life would be really affected greatly if you were not there anymore. Life insurance is necessary for that. If you have two people, for example, who are independent but married or together, but they both make a hefty salary and they can survive, it's questionable whether you really need life insurance at all, because you've got plenty of money to cover things and your life isn't going to be impacted by the loss of another high wage earner. I mean, you'll probably have less caviar at your next party, but who gives a shit, really? Your life isn't going to be thrown upside down because you never depended on that person financially in the first place. So life insurance is really about whoever's financially dependent on your life. That person would be changed dramatically if you were not there. And so life insurance is necessary to make sure that, okay, I may not be here because you don't have a chance to negotiate whether you're going to die or not. We all are at one point in time. This is just usually when you die unexpectedly, early. And other people are expecting you to make a paycheck so you can pay the rent or mortgage and you can pay for various bills and so forth. And so if you're not there, that's a huge change. It's a huge risk. So basically that's the whole purpose of life insurance. And again, you might need it. You need it more when you have a lot more people that are depending on you. If you're single, you have no dependents, your work might give you a little policy, and that's going to be plenty to cover the funeral costs. But you don't want to be overinsured. You don't, and that's why in one of the questions I have coming up for you is you don't want to be worth more dead than alive. And some people overinsure themselves to the point where it's like, well, actually, this person is worth more to me dead than alive. It's a horrible thing, but it does happen. It does happen. So life insurance really covers those types of risks. Certainly, if you have dependents, you're going to need a lot. As you get older and your kids are grown and they're not depending on you because they have their own house and their own job and their own things going on. As you're older, you really, and you have, you don't have a mortgage, you don't have other types of things, you really don't need much of any. You know? So the needs for life insurance will change depending on where you are in life and who's depending on your income. The payment is to those beneficiaries, folks who are going to receive the money if you die. Um, and usually those are the ones who are dependent on your life in the first place, thus life insurance. So someone who is dependent is someone who relies on someone else for income and for care. And so you want to make sure that if you were not there, um, that those dependents are have enough resources to live their life and to provide enough care for them, so you don't have so their life isn't changed dramatically. Of course it will be changed because you're no longer there and obviously you're important, but all the other stuff won't change. They'll still be able to live in their same place. They'll still have access to the internet and cable TV and their phone. They'll still have food on the table and things along that line. So that's really what this is really sort of about. You can get life insurance anywhere. Employers often give employees a basic policy. It's usually around the size of their salary. Um, some employers allow you to increase that amount, 2 times your salary, 3, 4 times your salary. But you can buy life insurance through any insurance agent that sells life insurance. And so that's what they mean when they say provided by individuals. So you can buy it yourself. You can go and seek out life insurance for yourself. So, basically speaking, what you have to do here is there is a lot of thinking to do when you're looking at life insurance, because if you're not there, how much is all that unpaid work worth to have covered, right? And so this is one of those types of things where if you do have a spouse and you do have dependents, um, there's going to be a transition period of time. Everything still has to get done. It's going to take resources to do that. Life insurance should cover those types of things. And so it does take a little bit of time to work through. And we're going to look at a little bit of this in chapter 8, not too much detail, but just kind of give you the overview. Okay. So when would it be necessary to purchase life insurance? I would say anytime you have a dependent, then it's absolutely necessary to have life insurance. And so that's really the critical piece. A dependent doesn't have to be a child. It can be someone, who has other disabilities who are dependent on you, or someone who could be much, much older that would suffer greatly if you were taken away, if your life was cut short by whatever reason. So anybody can be a dependent. It's just a matter of making sure you're defining those types of things quite well. Okay. So for this particular PowerPoint slideshow, the review is insurance is part of financial planning because it covers risk of loss, okay, financial loss, okay. It's not intended to make you wealthy, okay. It's just supposed to cushion the blow and bring you back to where you were prior to the incident. Okay. Insurance can be acquired from different sources. You can purchase it individually through insurance companies. You can get some through your employer. There's some that are government sources, as we talked about earlier. But even with insurance, not all the risk goes away. There's still a need to have some funds put aside so you can cover things like deductibles and co-insurance. And then, of course, you have to pick the insurance that covers the specific risk. And so the insurance policies are set up to cover very specific risks. And those are the risks you got to think about. Okay, so let's take a little tour, and let's see if you can guess based on the risks that the insurance that we did cover so far. Which one would you need here? And let me start with Tim, if I could. Tim Mead. You are having a baby, which in and of itself would be a news maker. And you know that, Tim, right? If you were having a baby, that would be in the news. Tim, you're having a baby and you need medical care. So what type of insurance coverage would cover that risk? Tim, are you there? Okay, Tim, what type of insurance would cover this risk, having a baby and needing medical care? Tim, any guess? All right, I know what you're thinking. You're thinking health insurance, and that would be correct. So health insurance in this case is the coverage you would need to offset the risk of needing medical care when, of course, everybody needs medical care. Everyone needs to see the doctor at some point in their life. It's just no one's exempt from that, you know. And so basically speaking, it's just something everybody has to do. All right, let's go on. Angelina, how you feeling today, Angelina? We're going to do this one. You are unable to work for 6 months, but you need help paying your expenses while you're out of work. So what insurance will cover this risk?
Disability?
Yeah, this would be disability insurance would cover this particular risk. Okay, nice job. All right, let's move on to, let me just go down here. Ricky, how you doing, Ricky? Can you hear me, Ricky? Yeah, all right, good. Ricky, you are elderly. Did you know that? You probably didn't know that. Yeah, all right, just some news, more news for you. You're elderly and you need assistance from medical professionals to continue living at home. What type of insurance coverage would help with that risk? Do you remember any of them? No? You're waving a white flag? Let me go to Adam Brandt then. Adam, could you help him out? Or was Adam is driving or something? Or what? No? No.
Yeah.
Adam, what insurance coverage would help an elderly person who needs assistance to continue living at home?
It's not Medicaid, is it? Or is that not insurance?
It could, yes, it is. It's insurance, yes.
Yeah.
But technically, yes, it could be a possible answer to this question. So I'll give you credit for doing that. But in essence, what we're talking about here specifically is the long-term care insurance. This is what this
Yeah.
is to cover. But anyway, I think you did good anyway. I would agree. Medicare is certainly an option to help with this. Yes. Thank you for that. Good job. All right, let's move on to another risk. And this time I'm going to Nick. Nick, how you doing, Nick?
How's it going?
Oh yeah, just living the life. Here we go, Nick. Ready?
Yep.
Your home is destroyed by a tornado. Well, that's what they say out in the Midwest. Tornado. It's destroyed by a tornado and you need to rebuild. So what insurance coverage is going to help you with this risk?
We're going to go with homeowners insurance.
Okay, and very specifically, you're right, it's going to be the property piece, property insurance, right? Homeowners, but the property. So it's not liability because it's property and liability, but it's the property. So tornado comes through, need to rebuild, it's going to be the property insurance coverage that's going to help you cover this particular risk. Nice job. Nice job. Thank you very much. Thank you for playing. All right, let's move on. Who wants to play? The other Adam wants to play. Are you there?
I am here.
Okay, awesome. The car you are driving, Adam, causes an accident that injures somebody else. So it injures someone else. So what's the insurance coverage that's going to help you with this problem?
Well, obviously it's car insurance, but it's
Yeah, what part though? Remember, there's property and there's liability.
I'm gonna go with liability.
I think that's a good one to go with. Yeah. So your liability coverage under your auto insurance is going to cover this particular risk. Okay. Because it helps to cover any injuries that you cause someone else. Superb. Superb. Nicely done. All right. Who else wants to play? Dennis, you're nice and quiet. I'll pick on you.
Dennis.
All right. So yeah, Dennis. There we go.
Life
Um,
insurance.
A sudden death of a family member results in the loss of income in your home. So what insurance is going to help you cover that risk? Because that doesn't
Life insurance.
All right, that's going to be life insurance. Yes, that's exactly it. Okay, that's the purpose of that. Okay, very good. And you did a wonderful job. Congratulations, everyone. Thank you for playing. Let me click out here. Woohoo! All right. So I'm going to move on to something new and exciting, I hope. Yeah. Okay, can everyone see? Did I pick the right? I picked the wrong one. Story of my life. Yeah. All right, so I'm gonna go ahead and stop the share and bring us back to our main screen now so we can regroup. So I can regroup.